Hello, my name is Marilyn. Welcome to the demo for Lease Accounting in Oracle Fusion Cloud Financials. In this session, we'll cover the feature related to lease term reduction with liability remeasurement. The feature summary for lease term reduction with liability remeasurement include modifying lease to shorten the term in accordance with ASC 842 lease accounting standards, accounting for the lease modification under ASC 842 by remeasuring the lease liability, and the carry amount of the right of use asset is adjusted by the amount of the remeasurement of the lease liability. The business need include enabling compliance with ASC 842 lease accounting for lease term reduction, which increases operational efficiency with streamlined lease amendments. Finally, the outcome is the contraction of lease and asset per ASC 842 will have a reduction and remeasurement in liability and right of use. There is a percentage reduction for IFRS but none for ASU, and loss for early terminate lease or asset. So before I start the demo, I wanted to cover liability remeasurement. They occur when there are changes in the lease term or other significant factors that affect the liability on the balance sheet. Some key triggers for remeasurement include change in the lease term, such as a reduction in the duration of the lease, or a change in a payment amount, such as a rent increase or a rent decrease. When the remeasurement occurs, the liability is recalculated based on the new terms, and the corresponding right of use asset is adjusted. This impacts financial statements affecting both liabilities and assets. So let's get started with a term reduction. I have an active lease here, lease number 1105. It's an expense lease that starts in Jan 1st, 2022 for 2 years, which ends in 12/31/2023. It's a property lease with primary accounting classification of an operating lease. I want to do a term reduction. So in this case, I'll select Actions, amend the lease. I'll keep the amendment name the same, 11052. The subtype of amendment was now a scope decrease, and my amendment commencement date is August 1st, 23. Here you'll see in the overview page that my lease end term is 12/31/23. I want to reduce the term to 9/30/23. You'll see here 2 years now will get adjusted to 1 year 9 months, so it's reduction of 3 months. I'm going to do the same thing for the asset. I'm going to adjust the asset end date from 12/31 to 9/30/23. And the last change I'll do is on the payment line. I'm going to adjust the payment to also reduce it. In this case, you can see the 24 months, a recurring payment of $10,000 each. I'm going to split that payment. So the payment then gets split. My recurring is now 5 remaining periods. Since I'm reducing it, I'm going to change the 5 to 2, and I'm going to reduce the amount of $10,000 to $5,000. So if everything looks good, I'll save my changes. I will then validate my lease. Make sure everything looks good. It says the lease was validated, and here you can see the amortization end date has been changed from 12/31/2023 to 9/30/2023. I'll then generate schedules. So the payment schedules have now been generated. Now we'll take a look at the schedules, search for the modification summary to view the changes that we have made. For asset number 8011, you can see for my base rent, I have accounting standard for ASC 842. On my liability amortization, you'll see my previous liability of $49,223.91. And then did a remeasurement of liability for a negative $39,278.46. This was based on the 3 months reduction of $10,000 each for 3 months for a total of $30,000, plus the reduction of rent from $10,000 to $5,000, which gave us $10,000 in total. Added to the 30, what gets me my $40,000. The system calculate the interest then of this $39,278.46 for the remeasurement of liability. So our new liability is $9,945.45. You can see the previous amortization end date of 12/31/23, and for the right of use amortization, you'll see similar numbers to that of the liability, and my adjusted new amortization end date is now 9/30/23. There's no percentage of reduction. In this case, it is 0. And it's 0 because for ASC regime, there will be no reduction. Had this been an IFRS, then you would see a 60% reduction, which is basically the 5 remaining months, which was reduced by 3 months, would have given you the 60%. Here you'll have the amendment commencement date of 8/1/2023. And as I scroll to the right, you can see the change in cash flows for $40,000 negative. Again, that was the 3 months at $10,000 each of 30 plus a reduction in rent for a total of $10,000 for a total of $40,000. The type of amendment is a revision, and since it's a reduction, you'll see a subtype of amendment, a scope decrease. There is no gain or loss. You see here is 0. This goes directly as remeasurement accounting, and so there is no gain loss accounting in this scenario. If everything looks good, you can then activate this contract. In this case, I'll cover the next scenario, so I will discard this scenario. So now the next scenario I'll cover is an early termination, which is a reduction in the duration of the original lease term. In this case, I'll select actions. I'll do terminate leases. I'll select the termination type as lease, and then I will select the end of July to be a complete month, 31st of 23. I'll continue, and here the lease termination process has been initiated. You can see in the overview tab, the lease end date is now reflected as 7/31/23. You'll see the same thing for the asset. Asset end date of 7/31/23, and the asset status is now termination in progress. As I page over to payments, you'll then see also the payment end date of 7/31/23 with the payment status of closure in progress. If everything looks fine, I can then validate my lease. The lease has been validated, and here you can see that then the amortization end date now has been changed from 12/31/23 to 7/31/23. I'll then generate the schedules based on the new term, and the payment schedules have been generated. So here we'll look at the details of the modification by looking at the schedule, finding the modification summary, And if I look for that same particular asset, 8011, for base rent, I see an accounting standard for ASC 842. For my liability amortization, previous liability and reduction of liability are both $49,212.91. So there's no change in remeasurement of liability. As I look at the previous amortization date, it's 12/31/23. With the right of use amortization, slight difference on the previous right of use versus the reduction of right of use, which then gives me my new right of use difference of $317.54. My new amortization end date obviously is 7/31/23, and you can see the percentage of reduction is 99%. With my amendment commencement date I entered, and this termination one is 7/31/23. You see the change in cash flows of $50,000, which is basically the 5 months that were the difference between the end of July till end of December at $10,000 each, gives me my $50,000 negative. The type of amendment that was chosen for this one was a termination. It was a scope decrease, obviously reduction of 5 months, and you can see the gain or loss of a negative 5.04. So that concludes this presentation for the demo. Thank you for attending.